Hey guys, welcome back. Welcome back. We're not gonna wait. We're gonna just jump right into it. And I want to thank you for coming on here with us today. And we want to talk about why the stock market is continue dropping. Like we will get a good hit and a good day, and then the market will continue to drop. So we want to talk about that for a little bit. And there is a couple of things that will cause that. One, we have inflation. One, we have the China lockdown. Most of the tech stock, as you guys know, is tied to China. So once China is open, we will see a rise in the stocks like Facebook and Nvidia and all that good stuff. But I still think that oil is a great hedge. I mean, I have a couple of oil stocks and we love the dividends so much with the great dividends. So I would be talking about some oil stock. I would be giving you some recommendation about buying some oil stock. But the one thing I can tell you is that right now, if you invest in, it has to be money that you don't need right now, that you can wait to rebound because you're buying things very low. And when the market rebound, you will be in a great spot. You will make a lot of money, but you have to decide it right now. That is money you wouldn't need for the next 6 to 8 months. So guys, I don't want to stick, as I always say, I'm going to go to Jim Cramer and Jeff Marks from the CNBC Investment Club. As you guys know, I think it's a great club, and I think you guys should all be joining that club. So let me go to Jim Cramer and Jeff Marks from the CNBC Investing Club. So let's, guys, go back and do that, guys.
Jim Cramer with Jeff Marks for our morning meeting, exclusively, yes, of course, for the CNBC Investing Club. Now, I got to tell you, as I said to you, Jeff, and one day we'll have a camera up there, this is a mixed moment. We have a lot of semis coming down, and we understand that. But then we have some of the defensive stocks coming up. But then we have some defensive stocks going down within. I'm hearing General Mills going down to McCormick, and I'm hearing Intel referred to Intel and to AMD. And here's the way I want to put it. Again, if you are a company that makes things or do stuff with a profit, that sells at a reasonable price and returns it, your stock is still holding up. And I think that we must stay with that no matter what, a la a Bed Bath, which didn't have it, okay? Or just to be honest, Bausch, we're looking at it. I want very much to buy some, itching to buy some, but it doesn't have what we want yet. If it gets it, we'll do it. But I do think that we are seeing some of our companies being killed, like NVIDIA and AMD and Marvell, maybe in part because they don't have the return of capital that we want. But I would emphasize that they may not be as bad as people think.
Sure. And to your point, if they have the balance sheet, they're going to be able to, and they have the free cash flow generation.
NVIDIA does have a big buyback.
Right. AMD has a buyback. AMD has a buyback as well. But if you have that balance sheet, if you have that cash flow generation, you're going to be able to get through this turbulent period. We don't know when it's going to be over, but you're going to make it to the other side. AMD down sharply yesterday on a report that Intel was cutting prices on some of its PC chips. Down heavy today. Bank of America came out, slashed their price targets on pretty much their entire semiconductor coverage. Though they do say stick with the 3 C's, cloud computing and AI, which includes NVIDIA, which is a topic, AMD in there, Marvell in there as well, stocks tied to cars and also CapEx. But again, AMD, 52-week low here.
Yeah, and Qualcomm was the one that we were buzzing about yesterday, that maybe they come out and say something about Apple. They didn't. Stock's down 3 today. But again, 11 times earnings, good balance sheet. Now, I put up SMH for the particular reason that everything trades together. Okay.
And SMH is the big semiconductor index.
Right. And my experience is that initially they trade together and then they begin to separate. You separate the wheat from the chaff. And I'm going to be discussing that tonight on Mad Money, wheat from chaff separation. We also have this, by the way, we're seeing this in the internet, massive downgrades in the internet. People just like downgrading every single thing. And yet there I am with Adam Slipsky yesterday, who is the CEO of Amazon Web Services and sustainability, by the way. And he's just saying, yes, okay, so we overbuilt. We're going to rectify that. Mm-hmm. And, you don't just put them on because like things are are really bad. You put them on because it shows you that the Amazon Web Services is doing well. And this is an interesting note.
And to be clear, he was talking about overbuilding on the retail side, the warehousing side. But from what I heard last night with the interview, still in the very early innings in this AWS story, which is really the profit.
Very early. Maybe he's thinking about even the 10%.
I think.
Now Jim Chanos, I've known for 30 years, short seller, is shorting the data centers. Well, you know what?
The REITs.
Right. I get that. I mean, we don't need as many, but that has nothing to do with it. All that is good for Amazon. Yeah. Because if they have to go get space, they can get it for less than we thought.
Let me ask you this. So you bring up JP Morgan. They cut price targets on their entire internet coverage. Yet we're seeing Amazon higher today. I believe Meta's higher today. Meta's included in that group. The other day, you were basically saying the estimates are too high on Mad Money.
Right.
So is this maybe an encouraging sign that, yes, estimates are coming down,
I mean, look,
but stocks
this
are rallying?
is a good example. They basically, in their previous quarter, said, listen, it's going to be 48. They're another one like Apple. They always said like $8 billion, $10 billion.
Sure.
So now what people are saying is, okay, when it was here, we thought that the estimates were too high. So here, even if the estimates are too high, does it not take that into account? Now, the other day I did a piece about how you got to be careful with like a toll or Lennar because the estimates could be too high and they get cut again. Now, the reason why I like this one is, don't forget, giant buyback, really great secular grower, and Meta being very real. And so, I mean, at a certain point, you have to say, okay, I'm going to stick my neck out and buy a little.
Mm-hmm. And I think the difference with the home builders, they're all trading at a low single-digit multiple, and that's implying the E is just way too high.
I don't think the E is going to
E earnings.
I don't think the earnings are going to collapse here. I think that, by the way, in the out years, 23, 24, you're going to see the benefits of what Zuckerberg is doing with. Now, remember, I spent a lot of time with him in the metaverse. I know that sounds strange. I mean, I really did. That's supposed to be omniverse, but I'm spending some time with Jensen Wong. The metaverse is a compelling commercial opportunity, as is the omniverse for NVIDIA. And I mention this because there's way too much emphasis right now on the consumer. Now, Intel is not doing well in the enterprise and spent a lot of time on the consumer. And you're now saying that the consumer is going to shift bad to industrial and enterprise. And that just doesn't have, they have nothing to do with each other, frankly. So, I mean, let's just forget the idea that that Meta has anything to do with Intel, that AMD has anything to do with Intel. I'm working hard on that today. And I'm just or Qualcomm cell phone, but they may have some news with Apple. I'm urging you to think and understand the way we built our portfolio, which is that we sold a huge number of these stocks when they were higher. We are still waiting to buy them back, but I'm itching to buy them back.
Yeah, waiting for things to come down. We haven't been too aggressive because we didn't want to just get back to owning all these semiconductors again, just given how we know the group acts very poorly when the Fed has to hike rates.
Right.
Valuation perspective.
NVIDIA making new lows. I get it. Mm-hmm. But, and you could say, well, listen, they're just going to keep hitting lows. Well, we sold some, and it's time to start buying it back if we can get a feel for it. I think it's soon. I don't know if we necessarily have a chart of Google, of Alphabet.
Yeah.
But now let's take a look at this, because I want to go into this for a second. This is really important. I spent some time with them, okay? Their business is holding up. And what's occurring is this. If you are trying to figure out how to do your advertising, your budget, it isn't like you stop spending money on advertising. What you do is you consolidate it all on your strongest company in terms of getting advertisers. I know this because I've done this all my life in the other part of my life that you don't see here. And they are doing it right here. They are doing incredibly well. The only thing that could derail them is a bill in the Senate, which is saying you can't do that where give me the best Mexican restaurant near me. That is, the Senate doesn't, there's some people, the senators don't want that. Some of the senators are just so anti big tech.
And when you say the best Mexican restaurant near me, that is a search function, and Alphabet dominates search with Google. Much different from a social media advertising platform such as what Meta has, or what Snap. Snap obviously had that big pre-announcement.
This is called first party.
Search has the highest returns
first party.
For advertisers.
So I'm going to show you on the board what happens here. So let's say you come out of the subway right here. and you're going to my wife and I just finally put the papers. We're no longer owned by San Miguel as of last night. That's because
congratulations.
Thank you.
Yeah.
Lisa owns a thing called Phosphoro, which is a mezcal, and you can't own both. But I devised this ad situation. So you come out of the subway and you say, well, what's the best Mexican restaurant near me? So we advertise at the top of the queue at Bar San Miguel. So then you come there. So now you have to say, wait a second, where are all your guests coming from? And you look at them and you don't know. But the one thing you do know is that Google sends you all those blue lines. So you realize, wow, I cannot believe that that so many of my customers are coming off the subway, and they show you the blue line over and over and over again. Now, there's no other advertising company that does that for you, and it's all first party. So I mean, it's not outlawed or anything like that. It's not has to do with Apple. So the money, as I am told from the people I know at Alphabet, is just pouring toward Alphabet. So selling Alphabet is like selling AMD, NVIDIA because of Intel. So I think what we're going to have to do, and this is the way I want to leave it, Jeff, we're going to have to spend more time distinguishing among companies so that people understand that when the sell-off's over, some go up and some go down. And the ones that we are buying, I am telling you, are time-tested. We are not owning any of these that we think at this point really face any estimate costs. Mostly because they just reported, and we know they're doing.
Right.
All right, well, this is Jim Cramer for Jeff Marks. Obviously, many, many things in flux. Of course, also July 4th weekend is going to be in flux soon.
Yep,
and all I can tell you is that I haven't borne down on stocks like this in ages, doing everything I can to find out everything I can for you, as is Jeff Marks. So stay tuned, please, to the morning meeting for the CNBC Investing Club.
All right, guys, welcome back, guys. I hope you enjoyed that. I hope you learned a lot, and I hope you're pumped up. I hope you're ready to go. And as I said, we building wealth one investment at a time. So thank you for tuning in. What I want to add right now is that the safest bet in my book is the oil stock. I still think PXD, Pioneer Natural Resources, is a good stock. It gives 13% dividend. It's a good hedge, so you should consider the oil, but you still should also consider some tech, because I think tech will be back, as they just said. That NVIDIA is a wonderful stock. I know I have it in my portfolio. We could also look at Marvell. You could look at AMD and Alphabet. These are great stock and they remain great buy. But I believe in PXD, and we're going to talk about PXD again. So I'm going to share you the chart of PXD, and we're going to discuss it because I think it is the stock to buy. So this is PXD, Pioneer Natural Resources. They're giving one of the highest dividends, and the price is $226.18 with a 13% dividend. Even if that stock goes down, you don't have to worry much about it because you're still getting a 13% dividend, and it will increase, guys. So hope you're finding value, and if you're finding a lot of value in my videos, please consider subscribing, please comment, and please like, and let me know if you think the video, if it's adding some value to your life. But PXD, guys, and I'm consider joining Robinhood, and I'm using my code, which I will share with you in the description. Anyway, guys, thanks for watching the video. I'll see you tomorrow when we talk some more stocks. Anyway, see you again.